So it's Tuesday, the 20th of February 2018. Just finished the morning's session with my gain as planned, or with the modus operandi that I want to put into place. And I just wanted to give everyone a quick catch up in what I'm doing. I have drawn down, if I haven't mentioned it before in the last video, I have taken a pretty big drawdown in the account. I'm still confident, still there, still got lots of room to eventually succeed in this account. But what threw me off track? Well, here's some notes that I've taken. And as I was drawing down and looking at what I was doing, on the 8th of February, I went back and I watched this video. And I very well may have shared this on the last video, I don't remember. But essentially, I was very analytical and selective, 13 trades over 9 trading days, all before 1 p.m. here, between 9 a.m. and 1 p.m. Central European time, with a 69% win rate with a 1.86 reward to risk ratio. This involved lots of patience, giving up too soon, quote, too soon, to preserve energy and hunger, and not afraid to take smaller gains, blah, blah, blah. But the main thing is very analytical, selective, which required patience. 13 trades over 9 trading days is roughly, let's do the math, 13 divided by 9 is 1.44 for recurring trades per day. The average trading month has about 21 trading days, so 30 and a third, or let's call it 30 trades per month, because you can't have a third of a trade. So 30 trades per month, and that is sitting here for an hour, anywhere from 20 minutes to 3 hours in any given morning. Usually I've never sat for the full 4 hours so far. So what does that mean? The average loss is about $50, because on 6C I take a 4-tick stop, which is $40 gross, $44.80 down net. And then the other two instruments, the Australian dollar and the British pound, I take a $54.80 stop. So let's just put that in the middle for argument's sake and blend it out to 50, roughly in the middle. So if we plug those numbers into this, what does that give us? First, let's find out the expectancy in terms of R, or risk. So to do that, you have to do 0.69 multiplied by the win rate, which is 1.86, minus 1 times 0.31. 0.31 being the loss rate, which is just 1 minus the win rate. So I could do that, I suppose, to make the calculation complete. 1 times 1 minus 0.69, which would be 0.31, and the 1 simply because when you lose, you're losing 1R. When you gain 1.86, and that comes out to 0.9734. That means if we're risking $50 per trade, we're making $48.67 per trade. We said 30 trades a month, trading half an hour to 3 hours on each morning, and that ends up with $1,460.10. So let's call it $1,450 per calendar month per contract. That's fantastic. Then you just build contracts. When you're on 2 contracts, you're making $2,900 a month, 4 contracts, not 4, if you multiply by 2, 4 contracts, 5,008, 8 contracts, 11,600, and you could probably absorb in all 3 of these markets, 6A, 6B, 6C, up to 10. So let's divide that by 8 and multiply by 10. And you could be making that kind of money in a distant future with discipline and so on and so forth. But let's stick to what reality for now, and that's 1 contract. This is where I'm at. This is what I can do with patience and being very analytical and selective, which requires in and of itself patience, and just letting time do the heavy lifting. That's $50 a day, $40 odd a day. when I compare that to people like Ross Cameron of Warrior Trading, or say Dave Knight of 123daytrade.com, and you see them getting these much bigger gains, 800 a day, 300 a day, 1,000, 2,000, 3,000. It's very easy to doubt yourself and your ability, and that's what happened to me. You will notice that one of my last videos before the drawdown, the two videos that I made before the drawdown, were of me making 150 and 200 in a day. Now, by no means that isn't fantastic compared to these other traders, but for me it felt good to be able to accelerate my gains, but I'm not able to sustain that for whatever reason. And so this is a good segue into the chart to let you know what's tempting me into this. So this was today's trading. I've marked up what I considered. I was considering longs all the way up here, but didn't get a signal, right? So I was thinking 85 long, take it off one tick above this high, so $130. Then I was thinking 89 long, still taking it off at this high, $90. Short here, and you see I actually did put my order here. I've recorded my session as I normally do, and I've got all the evidence of the footprints of what I was attempting to do, what I did do, and what I didn't do. And I know for certain I put the order on here, took it off, it would have got filled, would have dropped off, and I would have taken it off according to the rules. The only one that I was actually supposed to take is this one here, shorts at 96. The target would have been 86 right here for $100 for 50 risk. I didn't want to risk two trades at that time of day, because I was in 6C. So we've got two circles here, two shorts, both would have worked out. Move over to 6B. I was here looking for a short here, it didn't do exactly what I was looking for, but technically speaking this is an entry according to a hard and fast rule set, and that would have worked for 13 ticks. Then we had a long from 93 here, we would have taken it off here for 14 ticks. So there are 27 ticks there that I didn't engage in at all. And then there was a short here, but that's outside of my time, so I haven't marked that up. So 27 ticks missing here, numerous ticks missing 6A. 6C, I had a long signal at 940, didn't quite do what it was supposed to do, let it go. That went in favor. Enough for me to book gains. I would have got out somewhere up here for $60, for $40 risk right here. Then eventually I did, this is the correct trade to have taken. I had the target at 35. I took it off according to the rules at 38, net 5 ticks, $50 gross, $45.20 net in 2 hours and 17 minutes, the end of the day in the morning. Well, this was slightly after when I usually trade, but you know, till 1 o'clock, this was until the exit was 2:15, the entry was 1:40. So that's it. I did well on this. Did well to skip this regardless of the result, the outcome. One trade here skipped, profitable. Two trades here, profitable. And then two here, profitable. So you've got four trades that have been skipped that would have been profitable. One that I didn't take because I didn't want two trades on at the same time, and then finally I got one out of 6 opportunities. And it's this type of occurrence that has to happen every day in order to get this type of result, which most people would kill for. This ends up being you're making an ARP for every trade that you put on, a 0.97 expectancy. To put that into context, the casinos in Las Vegas, they have about 5.6, I don't remember, but in the fives, a 0.05 expectancy on blackjack, 0.05, compared to my 0.97. If a casino could guarantee that kind of return, already they spend millions of dollars to generate edge from this type of return. So this is not to be sniffed at, but because it translates into sort of smaller figures in everyday living, $50, this is what has got me swayed and what's affecting me at the time, at this time. And this is the reason why I've drawn down, but I'm putting this video out there to say I'm going to stick to my guns, do this. It's going to take time to dig out of this drawdown, build a buffer, and then take a check. At this rate, where I am right now, let's see, it's going to take about, let's see, let me pause the video and do the math. It's going to take approximately, given if I'm to follow these numbers, and of course past results are not indicative of future success, but if this were to play out into the future, which I've proven to myself time and time again in combines and FTPs when I stick to the discipline, then it's still going to take 39 to 40, based on those numbers, 39 to 40 trading days for me to get out of the drawdown, build a buffer, make $500 on top of that buffer, and then draw that $500, because that's what Top Step Trader allows in terms of a free withdrawal. So I've set myself the target of building the buffer, generating $500 on top of the buffer, and then at that time, after these number of days, 39 to 40, I should be able to draw that check. That puts me, we're at the 20th of February, basically that means 2 months. So February, March, April, I can expect to draw a check sometime late April, and if we add on a little bit of a buffer just for any mistakes, early May, to take a $500 check. In the real world, it just doesn't do justice to the time you're spending, but if you think long term and aggregate contracts and or this as a side job and get another job, then it does become worth it. But I just wanted to share, this video has gone on long enough already, just wanted to share this, put that out there, and this food for thought for those who are trying to generate income from trading, and where that fits into your overall life, and how to keep it contained and make it pay you rather than you pay it. So that's it for now, and back it in the next video that I put together. Bye for now.